Hey, good morning, everybody. Today is Friday, December 4th, 2015. My name is Cliff Backus, and this is your PushButtonStockTrading.com daily video market review. Markets continued to confound yesterday, trading sharply lower on heavier volume after higher opens. Trading volume was heavier across the board, giving all of the indices we follow distribution days. The distribution count on both the Nasdaq and the S&P 500 are very high, with 8 days and 7 days respectively in the past month. Distribution, or higher volume selling in the market, is a sign of institutional selling, and too much distribution in a short period of time can be an indication that an uptrend is in trouble. New lows easily bettered new highs yesterday. Small capitalization stocks continued to outperform large, and continued to outperform on a 10-day moving average basis. This is behavior more consistent with a bull market. Declining issues bettered advancers by better than 4-1 on the New York Stock Exchange Thursday. After having gone to our most aggressive timing indicator, a margin signal, on Tuesday, our market timing model is barely holding on to a buy signal today. A buy signal indicates that both aggressive and conservative traders can buy, but should not be increasing margin on their portfolios at this point. According to Investors Business Daily, the high distribution count noted earlier and a fall below its 200-day moving average by the S&P 500 have pushed the O'Neill timing model to an uptrend under pressure. The past 2 days of sharp selling may be hard for the market to digest. Leading stocks are showing the strain. Our timing models are urging caution. While both our model and the O'Neill model are technically on buy signals, it wouldn't take much to push both into negative territory. As always, keep your stops in place on all long positions, and be sure to follow your written rule sets. If you'd like some help with portfolio management or with your written rule set, please feel free to contact me. My contact information is on the home page. Okay, let's take a quick look at our Spectrum Analyzer. What we're looking at here is HGSI, High Growth Stock Investors' universe of over 8,000 stocks, sorted by a combination of the most powerful stocks and the most powerful industry groups. We've made a group of the top 100 stocks in that sort, so let's plug these stocks into our Spectrum Analyzer and see where the strength in the market is. Right now, of the top 100 stocks in our sort, semiconductor devices make up 20, renewable energy equipment 8, internet-based services 7, internet media 6, and rounding out the top 5, application software with 5 stocks in the top 100. We have been seeing a lot of semiconductor devices recently. We also have seen a lot of internet-based services and internet media recently, and a lot of application software. These may be good places to begin looking for stocks for our portfolios if the market begins to show strength again. Let's take a look at what the Nasdaq Composite's up to. Yesterday, the Nasdaq Composite was down 85.69 points, or 1.63%. We closed at 50.37. Trading volume was higher than the prior day. And right now, for you followers of William O'Neill, we are in an uptrend under pressure. The market went to a confirmed uptrend on October 2nd. Right now, on the Nasdaq, we're showing 8 distribution days in the past month. That's a lot of distribution, and notice how this distribution is clustering on the right side of the chart. That's a sign that the current uptrend could be in trouble. Right now, the Nasdaq is bracketed by support down here in the 4,900 area and resistance up here at the 5164 range. Notice how the Nasdaq undercut this trend line. We've been watching the market squeeze between resistance up here and this trend line and wondering which direction it was going to break. We've broken below that trend line, which would indicate that maybe we want to come down here and test this support level. Notice how the Nasdaq came up. It tested this resistance right in here and then failed. I think we're in for a period of weakness in the market. Not necessarily a sell-off, but certainly not a particularly bullish advance. I want to take off these markups and talk about what it would take for the market to go to a sell signal. In order to go to a sell signal on the market, we need to see four things happen. First, the NASDAQ has to be trading below its 200-day moving average. We show the 200-day moving average right here in black. We are well above that level right now, and so aren't in any immediate danger of going to a sell signal. Secondly, the 10-day simple moving average, which we show here in green, has to be lower than it was the prior day. Currently, we are lower than we were the prior day. The 21-day exponential moving average, which we show here in pink, also has to be trading lower than it was 2 days ago. We are in fact trading lower than we were 2 days ago. And the last criteria is that the NASDAQ composite has to be trading at least 1% below its 21-day exponential moving average. That's what this gray dotted envelope is. Notice how right now we're trading above that level. If we were to fall below that level, that would change our market timing to a don't buy signal. If we were to fall below this 200-day moving average, that would change our market timing to a sell signal. Let's see what the S&P 500's up to. The S&P yesterday was down 29.89 points, or 1.44%. We closed at 2049. Trading volume was higher than the prior day. The S&P is in uptrend under pressure with 7 distribution days in the past month. And as you can see, we have distribution clustering at the right side of the chart. Notice how the S&P yesterday undercut its 200-day moving average, which we show in black. Undercutting that 200-day moving average, along with all of the distribution that we've seen over the past month, has pushed the S&P to a market under pressure according to the O'Neill timing system. Right now, the S&P 500 is bracketed by support down here in the 2044 area. Notice how we tested that level yesterday and held. That's encouraging to the bulls. Resistance is up here in the 2134 area, which is the old high for the market. Right now, the S&P 500 is barely clinging to a buy signal according to our timing model. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & Liqueurs, Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & Liqueurs, Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & Liqueurs, Incorporated believes to be accurate. Ohannes & Liqueurs, Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push-button stock trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.